We're going to be talking today about, what does the rise of China mean for Australian businesses? The first up today, so let me introduce myself first and foremost. I'm Scott Rigby. I head digital transformation for Adobe across Asia Pacific. And I've got two great speakers as our lineup today. So the first one we're going to have up today is Dave Rumsey. He's CEO of ASAP Plus. And Dave's been actually based in Shanghai for a while now and been operating, prior to that he was operating in Australia but doing a lot of work in China. And he's going to be talking about kind of what the rise of China means for Australia. Now, regrettably, we've had our next speaker drop out due to illness. So we were having Jessica Wilson from Stashed was going to be our second speaker for this morning, but unfortunately he's not going to be joining us. But I have got, thankfully, someone to step in her shoes. So the follow-up speaker for today is going to be John MacKenney. So John's actually just joined Adobe recently. He's a business strategy principal, but John was most recently with Tourism Australia and kind of has a background in helping businesses and understand kind of what the Chinese economy means for Australian businesses. So I'm very appreciative to John for stepping in. So without further ado, I'm going to welcome up Dave. If you can give him a warm hand, please. Thank you.
Good morning. Just have to excuse my croaky voice. I've just been fighting a bug this week, but hopefully it'll be all right. I've got a glass of water here. So welcome. Let's talk about what the rise of the Chinese digital economy means for Australia. And I'll use the clicker as well so that I can click through my notes. So I guess first of all, I thought I'd set a little bit of a scene about China as well. And there's two things that I want to highlight here. One is just how quickly the Chinese consumer has moved through and evolved stages that have taken 50, 60, 70 years in Western markets and, say, a US market. The Chinese consumer has been through that in almost 2 decades, 2.5 decades. In the 80s, it started with the opening of the Chinese market. And so some of the big brands came into China during that time, brands like KFC, which is now actually the largest foreign food chain in China, incidentally. But other brands as well, like Coke and Levi's, came in. And really that was the opening of the Chinese market. And it was about foreign brands really understanding how they could do business. And so a lot of that revolved around joint ventures and state-owned enterprises. And even right through the 80s up until the end, there was designated spaces where brands could be sold and where people could buy foreign goods as well. We move into the 90s then, and really what happened is the consumer economy started to develop, and very much it became about following the crowd. So as wealth was generated, brands would be purchased, foreign brands would be purchased, and one consumer would see that somebody had that brand and would want to also have that brand themselves as well and follow the crowd, I guess. In the 2000s, though, the consumer economy really changed in China, and this identity of the Chinese consumer began to emerge. And I guess what's really interesting here is that all through that period, the sophistication of the market and the sophistication of the Chinese consumer continued until really where we talk over this past decade, the Chinese consumer has become very picky and has become very sophisticated. So China's had sort of unprecedented growth in this last, decade or so. Double digits every year, even though things are slowing up a little bit. It's an economy that's moving very fast. It's an economy where there's lots and lots of choice. Every brand you can imagine just about is in China. Many of the brands, their biggest sales are done in China. They outstrip most of their other markets for most of the brands. And I guess what's interesting is that as this increased sophistication has come into China, the internet has also played a huge part. And so e-commerce has gone hand in hand with the purchasing behaviour for consumers. And certainly online purchases in China as a percentage of total purchases are much higher than any other country in the world, which is kind of interesting when, from a Western perspective, sometimes you have these, thoughts about China and about how advanced China is or China isn't. From an e-commerce perspective, it is the most advanced market in the world. And it's also the biggest. It's interesting on the right there, you'll see that as the internet has grown in China, so has the online consumer market, e-commerce market as well. Up to 4,000 billion RMB is expected this year. the famous sales that take place every November, the Double 11 sales, see record numbers. In one day in China in November, you can add up all of the sales in the US for Black Friday. You can add up all of the sales in the UK, and there's still less than the sales that are being done. I think those numbers there were last year for Alibaba and now Jingdou as well, JD.com. The numbers are phenomenal that come out of the sales that are taking place. But what's really interesting, and I guess this has happened over the last decade as well, is that the imported brands and the Chinese brands have started to really fight for the share of voice for the Chinese consumer. So it's no longer just because you're a foreign brand, just because you're that designer brand or that fashion brand, that you have a rite of passage. There's no doubt that the designer brands and fashion brands are still very popular, but Chinese brands are emerging as well, which is really interesting. And you see the Kantar Power Index of brands is really showing that really right now, if the brand can meet the consumer needs, then the consumer will purchase it. It's not just about being a foreign brand anymore. And we'll talk about that a little bit more in detail. And I guess this really reiterates the point, this study that McKinsey do every year. And this year there was 4 things that I thought I'd like to highlight, which is really interesting. And that's really that for middle class consumers, and remember the middle class in China at the moment is estimated at about 300 million people. So about the population of the United States, which is amazing in itself when you think about the power of that consumer market. But what's interesting is about the consumers themselves. So Chinese middle-class consumers will spend more if a product or service is of higher quality. So if there's a perception that your product is good quality, then there's more of a tendency to purchase that product. Not just because it's foreign, but because it's higher quality. The attitudes towards trends have changed a little bit as well. No longer will people just blindly follow a trend. What they want is some sort of emotional connection that can help change their mind. Their attitudes towards brands as well, as I said before, are changing. It's not just about buying that foreign brand. It's about how will that brand make me feel better? How will that brand enable me to progress myself, to move myself up the social scale, as so to speak. And I think that when you look at this development and what's happening, we need to get a picture and a snapshot of China today. So this is a lot of background, but it sort of forms the picture of where the opportunities lie. So at the moment, China's population is about 1.4 billion people. Of that, 772 are estimated to be connected to the internet. So you can see that there's still potential growth there. The genders, male dominant, but not hugely dominant. And then you can see the age groups as well. And brands right now are looking at this powerful 18 to 24, 25 to 34-year-old as a real sweet spot of people that have experienced foreign brands and have experienced overseas travel in particular, and are a great sweet spot for for brands to target. The household monthly incomes now have been growing, and you see that almost 30% now make more than or around 10,000 RMB a month, which is a reasonable salary. The city tiering system is also interesting. So the Chinese government actually has planned the way that cities should go. And I know in the West sometimes there's a little bit of skepticism about these so-called ghost cities and these so-called cities that aren't full. Let me tell you, they're just planning ahead. They're actually doing what a lot of other countries don't do, because the people will be coming. There's no doubt about that the trend of urbanisation is going to continue. So out of those tiered cities, there's also a huge opportunity that's occurring in the level 2, level 3, level 4 cities. A lot of the foreign brands have focused mainly on tier 1 cities. And the reason they've done that is because that's where the higher incomes are. But there's huge growth in the middle class in those other tiers. And so now what's happening is brands that are coming in are maybe late to entry into the Chinese market are really targeting those lower tier cities and trying to get into those cities. And so what does all this mean in terms of the urbanisation piece? Well, by 2025, McKinsey estimates that 70% of Chinese will live in cities with more than 1 million people of population. Just think about that for a moment. It's huge. 221 will be the number of cities that have more than 1 million people. 400 million Chinese by 2030 will move into cities. And we know that alongside that is usually a growth in income, is usually a growth and progression into the middle class as well. So you see this massive change that's going to take place, that is taking place right now, has taken place in the last 10 years, and will take place in the next 10 years as well. I was having a great debate last night with some of my Chinese colleagues, and we were just talking about, some of the news that's out and about at the moment. And particularly, we're seeing this in Australia a little bit. I think there's a little bit of a tendency to want to see China crash, or when's the bubble going to burst for China? And we were talking about it last night. One thing is clear, though. Over the decade, China will continue to grow. There is no doubt about that. The underlying investment that's being taken in infrastructure, in urbanising, will ensure that the consumer economy is pushed along. And it'll be a consumer economy that has a middle class that's larger than the United States of America, to put that into perspective. So that gives you a little bit of background. What about Chinese behaviour, Chinese consumer behaviour? So the first thing that strikes you when you start working in China is that digital payments are just the norm. And when I say just the norm, the mobile phone has really taken over as the wallet. The physical wallet is not really carried around. And I guess in Australia, while the banks argue about whether Apple Pay is a good thing or a bad thing and all of those, this is already done in China. Just about everybody, I haven't actually met somebody who doesn't use either WeChat or Alipay from their mobile phone. Digital payments are just the norm. And that doesn't matter whether it's a huge transaction or whether it's a very small transaction. So, for example, in the morning, buying my dambing on the way to work for 20 RMB, that's a mobile payment that I use for that. I don't use cash. Whether it's buying flowers from the lady on the street who you might think wouldn't have a clue about technology. She'll just pull out her mobile phone, no problem, and a digital payment will be made via the WeChat or Alipay system. The other thing that's really interesting here, and this is where I guess some of the first opportunities come about for Australian business, is that there's been a number of studies, and particularly for Chinese travellers and when they're travelling abroad, if they can use the payment systems that are available in China, so the ones that they're used to, particularly Alipay and WeChat Pay, they are likely to spend more money. That's the way that they want to use those systems. Other countries have already taken this up in a much greater scale than Australia has. And I know that there's now, I think I was reading the other day, between 5,000 and 10,000 businesses in Australia that accept WeChat and Ali. The fact is there's much more potential for that as well. And so that's where the first sort of opportunity comes in. The other thing about China is that it truly is mobile first. So the average time spent this year will be 2 hours and 39 minutes on your mobile phone, which is quite incredible when you think about it. But that's the way that the Chinese consumer interacts. That's the way the Chinese consumer acts. Now in China, 84% of all e-commerce purchases are done via mobile, which is incredible when you think about that as well. Those numbers are so much higher than anywhere else in the world. And I wanted to just give you an example of something that's happened just over the last 6 to 12 months, and that's really WeChat's push into e-commerce. And so WeChat have opened this feature, if you like, and it can be done via their mini program approach or straight in their official accounts with the WeChat store. And I wanted to just walk you through this really quickly because it just shows how simple the purchasing process is. A Chinese consumer will pull out their phone, they'll go to the landing page of the brand or the product that they want. They'll then tap through to the collection page. They'll find the thing that the item that they want to purchase. They'll press that. They'll then purchase that item using WeChat Pay, and in 5 clicks or 6 clicks, they'll have their product. Their product will probably be delivered to them within 4 hours as well. That's the other amazing thing about e-commerce in China, is that the logistics for delivery are out of this world. The other day I asked one of our guys in the office to purchase me something first thing in the morning. It was there just after lunch, and that's just a common occurrence in terms of the way, none of this overnight delivery or 2 days delivery or 3 days delivery. It's instant. And so the whole user experience is very, very simple. The user experience is clean and it's very straightforward for the Chinese consumer. And this is another opportunity for brands who want to impact and who want to connect with the Chinese consumer. The other amazing trend that's starting, or has been going for a little while now, is this whole idea of see now and buy now. And so what you see here is you're seeing a opinion leader, an influencer, who's actually in a store and who's live streaming, showing her fan base, or the people that have logged into her follower base, showing them the latest line of clothing that they can purchase. And she'll go through a whole process of showing them different sizes, different colours. She'll have a model where she's helping to try on. I've got a little video about the way that works. And so there's all sorts of different, imagine Home Shopping Network on social media, but going to the very next level. So here, people are asking questions about the clothes, they're asking what size the clothes are. Often what will happen with these live streams is that they'll have certain days where certain sizes will be shown, a certain line will be shown, and encourage people to jump onto that live stream. And as soon as they see something that they like, in this particular platform, they'll just give it the thumbs up, and that's the see now, buy now, just happened, just like that. And this is happening all the time. We have to watch our staff to make sure they're not doing too much of this during work time. But this is just what's happening through China at the moment. And these key opinion leaders are making lots and lots of money doing this. Because at the same time, they're taking a margin. And one of the things that's interesting for me, and I've started to see it a little bit in Australia, is that the Dago market, so that those people that buy items on behalf of people and take them back to China, are starting to do this same sort of thing, where shops will allow them to, are starting to do this same sort of thing for their followers back in China, which is really interesting. It's a huge, huge trend, and something that the right Australian business could definitely take some advantages of. It wouldn't be a Chinese presentation without showing the Kantar media landscape. And I guess the point here is that China is very big. Lots of things happen very, very quickly. And although the BAT, so Baidu, Alibaba and Tencent really dominate what's going on the internet, there are plenty of other players as well in the mix. One of the things that's interesting is with the BAT players is they've started cross-investing in all sorts of people. So a huge cross-investment that's happened just recently is with JD.com. And you might remember as well, if you've been reading any of the press, Google have also made a huge investment into JD.com as well just recently, which is kind of interesting as well. Even these big Western players that are so successful know that if they can get a piece of the Chinese market as well, that's the next rise in revenue and I guess share price ultimately for their shareholders in those new markets. So as I was talking, right now 55,000 people have been picked up by a DD driver. That's the Chinese equivalent of Uber. It's a great story of Uber coming to China, spending lots and lots and lots and lots of money, and being chased out almost, having to do a JV. Some would say with their tail between their legs, but others would say it's been a great investment because DD's market value is continued to rise. But there's lots happening in China all the time. So what are some of these social changes that are changing consumer behaviour as well? And I want to just take you through a few. And these are things that you can think of for your brands and how you can tap into those different changes in behaviour. The first one is the rise of the male wallet. So this is something that has been a real change, particularly in the last 3 or 4 years. Now when the survey results come back, they come back saying that men are spending more which is quite amazing when you think about it. But it's to do with, look and grooming and all those sorts of things. And if you look at the statistics around the amount of time that men spend on grooming, Chinese young middle class, you'll find that it's almost the equivalent of the same amount of time that young ladies spend as well, which is quite interesting. But I think it just says a lot in terms of the way that the consumer is becoming, male consumer is becoming more sophisticated as well. The next one is this idea of self-loyalty. So there's this concept in China, and it continues today, about bettering oneself, about moving up the social scale. And one of the things that has happened in fashion in particular is that this idea that we will just follow the brand, or just because it's a foreign brand, just because it's a big name, that's what we're going to go with, has changed. It hasn't totally gone away, obviously. This is the market where brands still sell very well and very profitably as well. However, what's happened is there's this idea of self-loyalty which has come out, which is buying products that reflect their values. And so young Chinese consumers in particular, so in that age group, that 18 to 24 age group, are very socially conscious, are very conscious about the environment. Perhaps in the Western media, sometimes we hear a view on that. The Chinese government is doing a lot in terms of investment in the environment, in clean fuel, in all of these things. They understand there are problems with pollution, and young people are saying this isn't the type of society that we want. And these things are starting to be reflected now in the way that brands are positioning themselves as well in China. The next one is this health-conscious mindset. So some people are now saying that this whole fitness and health-conscious trend is taking over the luxury trend. So the new luxury is looking good, is being fit, is having that mindset where health is at the fore. That has a lot to do as well with government initiatives around the idea that China could be a World Cup winner by 2050. The fact that the Winter Games are coming in a couple of years as well. So this idea, sport and health have become bigger and bigger and bigger front of mind subjects for the Chinese consumer. I was reading just the other day, there's been about 39,000 fitness gyms, so studios like a Orange Theory or an F45 style, that have opened up in just the last 18 months. So it just gives you an idea of how quickly this is moving. WeChat's WeRun system is just going off the scales. I think Nike are rebounding hugely in the Chinese market with all of their fitness products as well. So this is something that's front of mind for the Chinese consumer. The other one that's kind of interesting as well is that Chinese consumers are open to being engaged. So what I mean by that is on a platform like WeChat, the click-through rates that are seen are much higher than you'll see on other platforms, Facebook, etc. I was reading that a recent Yves Saint Laurent campaign that was done saw click-through rates of 6.5%, which is pretty good when you consider what you might get elsewhere. The thing about it is, though, that the Chinese consumer wants to be engaged with engaging content. So if you look at examples that brands are putting out in terms of their creative for advertising, it's really cool stuff. It's cards that flash, it's interesting little gamified pieces of where people might piece a different product together. It's really well thought through. So you need to be creative when it comes to engaging with the Chinese consumer, but they want to be engaged with. They enjoy it. It's something that is a little bit different, and perhaps that cynicism on the West hasn't flowed right through there yet in terms of advertising. And I guess there's already Australian brands, this is the other point that I would make, that have had tremendous success. So there's a whole lot of press, I'm sure, that you've seen about Swiss and Blackmores and Chemist Warehouse. One of the things that drives this, and this is one of the things that you might not know, is that Australia is very well regarded by Chinese consumers. Australia ranks very highly. When I was back in tourism, Australia always ranked right up the top in terms of aspiration, in terms of a place that Chinese want to go to. Now, why is that? it's quite straightforward, really. Australia is seen as safe. So when it comes to issues of food safety, when it comes to issues of food quality, Australian food is seen as very high quality. Australian wine is seen as very high quality and is Australia's biggest wine export market now. And that's amazing that the Chinese consumer wants to continue to buy Australian products. You know, I was reading that A2 Milk saw a 204% profit increase in the last year. Almost half of their profit now over half of their profit is now coming from the Chinese market. And I think that one of the things that you can do as a brand is that you can check whether or not people are talking about you. So you can look at the WeChat index, you can look at the Baidu index or Sogou index as well. And you can also do another thing, and that's to check on Taobao, Tmall, whether or not Daigous are selling your products as well. So it was a really interesting story about Aesop and the popularity that they had in the Chinese market and with Chinese consumers, and the fact that their products were being sold by Daigous as well back into China. So there's lots of ways that you can sort of get an understanding and find out whether or not your product is of interest. And then back home, back here, there's a few things that Australian brands can look at as well. You know, this year there'll be over 230,000 Chinese students in Australia. Chinese students spend a lot of money. Chinese students buy things not only for themselves, they buy things for their friends and family back home as well. There's a huge opportunity here with that market. And what you'll find is that the discretionary spend that a percentage of these Chinese students have is very, very high. So there's opportunities there. Obviously, there's opportunities with outbound tourists into Australia as well. So this year, there'll be about 1.5 million, I think is the latest stat, of Chinese tourists that will be coming to Australia. They'll spend over $10 billion in overnight spend. The number could actually be higher because the way that some of this data is collected is not the most scientific. But it could be even higher than that. One of the things that we do know is that if we reduce friction for a Chinese traveller, and if they can use the payment methods that they would like to use, if the F&B choices are China-friendly, if the hotel is China-friendly, if there's a little bit of care taken to make that Chinese consumer feel special, they will spend more money. There's no doubt about it. And so there's a great opportunity for Australian brands in the outbound tourism market as well. So I guess there's many ways to engage with your Chinese audience. And I guess there's three simple things that I thought you could take away from the discussion today. The first one is there's a real opportunity to accept Chinese payments. That's something that can be done right now. There's a number of players in the marketplace that will help facilitate that. And it's becoming better as well. So a few years ago, it was pretty difficult when you wanted to be a merchant and accept WeChat or Alipay, simply because of the terms and conditions and settlements and all that sort of stuff. But that's all improved. That's all getting much better. So there's an opportunity right now to be able to directly connect to your Chinese audience. The thing about that that's interesting is if you can do that, so if you go through the process of making sure that you can accept those payments, then you can be on their platforms the next day and enable them to transact with no problems. There's very straightforward ways of doing cross-border delivery of goods and settlement now. It's not as impossible as it once was. And so you can be on their platforms, and that may be just WeChat or maybe just Weibo at first, but extend out to these other platforms as well. You can use influencers right now and get them to be promoting your product, like this young lady is here with the lipstick. These are things that you can do to encourage the Chinese consumer to buy your brand. And then the last thing is, you can actually have direct conversations as well. So if you set up an official account, if you are perhaps in the travel business, and you go and look at some of these travel user-generated content platforms like Mafengwo, like Chungyou, you can actually look in the comments sections. You can interact in the comments sections. And the leading Australian brands are doing that now. That's the other thing. The Australian brands that want to be in China, that see the opportunity in China, are doing this right now. I see them. I see it happening. We help brands do that as well, obviously. But there are brands who are starting to do this, who are starting to interact and to have that conversation. So there are 3 simple ways that you can take advantage of this rise in the digital economy. And the rise in the Chinese digital economy presents amazing opportunities for Australian businesses, no doubt about that. And I gave some examples of that previously. But you'll have to do a little bit of work. You'll have to go beyond the basic channels. So WeChat's not just enough. You need to look at the whole ecosystem as well. You need to look at how your traffic's getting there as well. And you need to look at your strategies around how you're going to get traffic to your WeChat site. There's a whole bunch of e-commerce providers now. So it's not just that you need to sign up to Alibaba's $1 million minimum spend for a Tmall branded shop. You can go to NetEase, you can go to EVIP, which has recently had a lot of press, I know, in Australia in terms of their cross-border capabilities as well. However, China changes really quickly, so you've got to be able to move with that as well. There's this concept of China speed. I'm not sure whether that means chaos. Sometimes I think it means chaos, but it's not all the time. I think it means when a new thing comes up, a Chinese consumer will accept it really quickly. If it's going to somehow help them, they'll accept it really quickly, far more quickly than a Western consumer, in my experience, will accept it. And then the last one is understand a little bit about the Chinese consumer and about their world. I've given you some high-level insights, as much as I can in half an hour, about the Chinese consumer and about the platforms they're on. But take a little bit of time. There's lots of great material around now that you can look at and read, or you can talk to me, obviously. But keep your strategy, whatever you decide to do, keep it lean and make sure that you're quick to adapt. And every quarter, you're re-evaluating what's happening. Here's my WeChat. I'm not sure if you're a WeChat user. If you want to do business in China, you have to use WeChat. That's just the rules. So there's my WeChat. If you want me to send a copy of this presentation to you, I'd love to, or my Twitter as well. Thank you.
Thanks so much, Dave. So I know quite a few of you sort of came in a little later. So unfortunately, Jessica Wilson is taken ill. So she's unfortunately not going to be presenting today. But I do have another presenter for you. So we have John MacKenney, who's actually an Adobe consultant, and only joined us last week. So he's a business strategy principal. But more recently, he was head of digital for Tourism Australia. And he's going to be coming up and kind of filling in for Jessica. So very much appreciative to him to kind of filling at the last minute. And he's going to be talking again about sort of the China economy very much from kind of a stats perspective and where the opportunities lie. So if you could please join me in welcoming John. Sorry, the one thing I wanted to add is we'll do Q&A at the end for both Dave and John for 15 minutes. So please join me in welcoming John. Thank you.
Great, thanks Scott. So yeah, last minute call up, but great to be filling in and great to be talking with you guys today. So really what I thought we'd do with about 20 minutes or so that we've got before Q&A is really talk about some of the trends that we've seen in the Chinese digital landscape, but really focus on what's next. You know, we hear a lot of things in the Australian press around this potential slowing of the Chinese economy, but there's a number of factors out there at the moment that suggest, particularly when it comes to digital, we are literally very much at the beginning of that journey. Interestingly, yesterday when I was doing some research for this was posted on the New York Times, and it sort of breeds this concept of that probably scares a lot of us in the West about growing up without Google, Facebook, or Twitter. But I think as Dave demonstrated with his speech, that's not an issue for the Chinese consumer, and in a lot of ways, they're actually far more advanced than what we are in the West. You know, China is one of the world's largest investors in digital technology. Digital investment represents about 32% of GDP in China and is growing on average about double what the rest of the economy is in China. So it means a lot to them. We've got the three very large internet giants in China, being Baidu, Tencent, and Alibaba. But as Dave sort of articulated, it is now much more than that. But they've really set the landscape and really set the agenda for growth in the Chinese market. The government landscape is also really important in China. They've facilitated an area around innovation by largely not over-regulating the internet sector, but then also have been working towards some really strong proactive policies around internet adoption, and then obviously started to invest quite heavily themselves in digital tech. Obviously, it's had a profound impact on the Chinese economy and the quality of life all through the cities, as Dave articulated. But there's no doubt that it's going to impact on the West as well. There's constant reference points, having spent time in China. When you look at the directions of Facebook and the social media channels in the West, you can see this constant nod back to China and building out of some of those facets that have already been in that market for a number of years. So over the past decade, China has continued to, has led in a number of aspects of the digital economy. In particular, retail and e-commerce. If you look back, only a decade, e-commerce in China represented only 1% of the total e-commerce spend globally, to now representing close to 42%. In terms of the transactions. But in terms of value and mobile payments, it's an 11-fold factor above where the US is in terms of that mobile payment adoption, which is it is mind-blowing in terms of the scale of what's happening. Dave touched on the 1111 sales. I mean, the ability to not only process mobile transactions, but process mobile transactions at the scale that they do and have the infrastructure in place to manage that is really mind-blowing for a number of us in the West. Investors are really enthusiastic about Chinese startups. If you look at so-called unicorns, so startups that are valued at greater than 1 billion, 9 out of 23 of those fintech startups are in China, but they represent over 70% of the value of those. And 1/3 of the total unicorns are now present in the Chinese market. So it's an area of huge growth, and it's an area of great investment. And it's clearly a very potentially lucrative landscape for investors from all around the world, but then also how those learnings will transition across into the West. And what we're seeing is a huge raft of investment going into a number of these key technology areas. So, while it represents 32% of GDP for China today, we would expect to see a continual amount of growth. China is now one of the three largest investors in technology globally, but they're focused on two main areas, particularly fintech and blockchain technology, where they're the number one investor now in that area, but then also around artificial intelligence and machine learning, which I'll talk about a little bit more about later, particularly around how the government is focusing on that area. So it's been very clear around where the Chinese government and the Chinese people see the future and where the broader investment needs to occur. So certainly blockchain technologies and AI are a big part of that. If you look at the venture capital sector, it's also rapidly growing. It represented about 12 billion back in 2011, and it's grown to nearly 77 billion and now represents 19% of the worldwide total in terms of venture capital. So area of huge investment, both from the government and also from the broader private sector. But looking forward, there's really three factors that are going to impact on that growth moving forward. The sheer scale of the Chinese market in terms of consumers, but much more than that, the nature of those consumers. The fact that they're largely digital natives, the fact that they are fast adopters of digital technology really sets up that market for success. The second key factor is the BAT. They've created this amazing ecosystem of multifaceted, multi-industry platforms that allow consumers to connect in a much more integrated way than what we're able to do in the West. And so that base, plus the proliferation of startups, really set them up for the future. And the third one is government. The government approach to regulation, or in some cases, lack thereof in terms of delaying regulation to give time for innovation, policies, and then also investment is key. If you look at that compared to what might be happening in this market or other government markets, the clear focus around innovation by the Chinese government is something that we could probably learn a few things from here in Australia. So let's look at the Chinese market. I know Dave covered off a number of these things as well, but if you look at total internet users in China, around about 731 million. I always get confused with these slides. You've got to make sure you say million and billion around the right way with China. But total internet users, 731 million. Just a mind-blowing stat, you sort of rattle these things off, that's larger than the US and the European Union combined. There's the sheer scale of that to understand that. But so you've got a big audience. But then you look at mobile internet users, a 2.7 times uplift on the US market. So just the sheer scale of mobile internet, and that representing 95% of all internet users. So a huge amount of penetration. But I think where it gets really interesting and where the innovation is going to come from is the percentage of digital natives. So people under 25 years of age who have grown up in a time of the internet. Over 282 million, much larger than, that's close to the population of the US, of these digital natives who are going to rapidly adopt new technology, focus on innovations themselves, and really drive an innovation agenda into the rest of the world. So this whole landscape really sets it up for a market that allows innovators to go in and try new things, get scale quickly, and then be able to move on to the next thing. There's no doubt that will proliferate the Western market with those key learnings. The second factor, which is really important, is the role that the BAT has played. They've really had a dominant position in China for a number of years now, but in the process have been able to go in and really find niches where there's been inefficient industries in China. If you go back and you think about the foundations of the Chinese market being largely manufacturing, being able to go in and look at inefficiencies in the offline market, innovate in that space and build out capabilities has been a really critical part of the Chinese story. I think the best example of this is in the transportation sector. So if you look at in peak hour in Shanghai, only 48% of people will be able to find a taxi. If you look at Beijing, traffic jams apparently results in about $11 billion worth of lost productivity because of people being able to get around those cities. And what that's led is really an explosion in both the ride share and the bicycle share market. All of the BAT are now investors in Didi and have really seen a rapid growth across those. As an interesting case study of the unicorns and some of those higher end startups, two of the bicycle sharing startups have a total estimated value of $6 billion. That's more than the two largest airlines in Korea combined. So you just think about that as a concept and what that is worth to the economy. But solving an underlying problem of a truly offline issue that's been able to be solved through online and innovation by these big three. But they've gone much further than that, and you see this proliferation in apps in the West now and where Facebook's direction are going. But really, if you look at where the big three started, like a lot of companies in the West, they had a core focus. So the first, Alibaba at its core was an e-commerce platform. Online shopping through Taobao when it was founded in 2003. But now it's, since then has launched Alipay, a digital payments business, has a number of digital wealth management, and has just in 2016 acquired Youku, which is a video streaming product. It's probably the simplest example is it's very similar to YouTube, but I think that would actually be an representation of Youku's capabilities. Baidu, very similar to Google, started as a search engine and represents about 80% of the search market. But then they've gradually moved into mobile services off the back of their success in mobile search. They've now invested literally billions of dollars in offline to online services such as food delivery, group buying, financial services products, so completely diversifying into new areas. But their most recent shift, I think, is very interesting, where they're making further investments again into autonomous driving vehicles and a lot of investments around AI. So a business that started in search but has been able to innovate quickly and plan others. Dave's talked a lot about WeChat today, and obviously that's a platform that a lot of us are familiar with in this market. But largely that started as a basis of around social media, but has provided that really powerful springboard into other areas such as Tenpay, online banking through WeBank as well, and then more demand dining services through Dianping. So once again, being able to diversify that through their entire platform. And if you look at the graph, across WeChat now, they have over 40 applications and abilities to do things within that app. And across Alipay, it's close to 90 different interactions that you can do. So having the ability as a consumer to go into one application and basically do everything you need to do, whether that's booking dinner, paying for transport, paying money across to your friends, or transacting anything from very small transactions right up to very, very large transactions. The speed of that, the immediacy of that is amazing. What it's also enabled the Chinese, these big three, to do is scale very, very quickly. So if you look at Alibaba, when it originally launched for its Taobao product, it took them 8 years to get to 100 million users. When they launched Alipay, it took them about 5 years to get to the same milestone. But when they moved to live streaming and broadcasting, they achieved the same outcome in 6 months. So the scale of growth and adoption of new products and the ability to innovate at that scale is amazing in the Chinese market. The other thing that, and we talked a little bit about it yesterday, if you look at some of the things on main stage and other things even that we saw in Sneaks yesterday afternoon, was around this 360 view of customer. And it's a big thing that we talk about, and it's obviously a big focal point of what we're trying to achieve for you and our customers at Adobe. But really what these clients can do is really get that 360 degree view. Look at all those innovations, all those touch points that people have through, whether that's the content that they're looking at, and then how that then ongoing materializes then into a transaction, and then how they're able to personalize through that journey or potentially even serve advertising to that. So the ability of these platforms to provide insights and be able to really drive those interactions is truly world leading. But the Chinese ecosystem is growing beyond the big three. So in terms of venture capital investment, it is largely still focused on venture capital coming out of the big three, and they've provided 42% of all the venture capital that's coming out into the Chinese innovation sector. If you compare that to, we love acronyms, if you compare that to FANG, which is Facebook, Amazon, Netflix, and Google, they only collectively contribute about 5% into the venture capital sector in terms of startups. So what you can see is the big three provide that foundation and the ability to then build that investment out into the rest of the economy. If you look at a recent article by the Wall Street Journal for a company called BitDance, which is a news streaming application that is underpinned by machine learning. The most recent valuation of that puts that at close to $75 billion, and this is a privately owned startup. So clearly there's growth and clearly there's opportunity, and we can see that transition outside of the big three. I think that Kantar chart that Dave put up earlier, I think it gets scarier and scarier every time we see it, but it does give you an understanding about the breadth of the market and the ability to scale out and the ability of entrants to still come in and make significant inroads. The third most important factor then is the role of government. So, what we're seeing in China is the Chinese government have given room to these players to innovate. So if you look at things like Alipay's ability to make online transactions, it was 11 years before a cap was put on those particular transactions. If you look at online payments through Taobao, it was over 7 years before they put regulation in place to do that. Now, there's a number of reasons why that is the case and why that works for China, but certainly the absence of regulation has certainly created an area for innovation and an area where these companies have been able to move forward, which is possibly contrary to things that we might see outside of China. They've also taken a really proactive approach when it comes to policies. So if you look at Internet Plus, which is their policy around future innovation, they've detailed a detailed action plan around how to integrate the internet, cloud computing, big data, and Internet of Things into their manufacturing and consumer industries, which is a really positive step from a policy perspective. And then they've also actively facilitated further investment in digital. I think the best example of this is their Internet Plus artificial intelligence investments, where they aim to build a market for AI products, which is estimated to be worth about 15 billion by developing 9 major AI ecosystems across smart home appliances, intelligent automotive wearables, and smart terminals. So once again, to come back to what we talked about earlier, significant government investment in AI and fintech in particular, plus their approach to regulation and policy is really creating a very positive, landscape for Chinese companies to be able to operate and innovate. So just to finish off, I mean, the future looks very, very promising for China. Because of the 3 factors that I've just described, there's no doubt that they will continue to innovate and grow. The ecosystem that's been set up by the BAT will now be really a fruitful base for future innovators and allow them to really be successful. We shouldn't expect that that these innovations will reside only inside the Chinese firewall. We would expect now that this would proliferate not only out across, not only in China, but then out into the West and really inform a number of innovations in our products, but then also future directions for Western social media. So it's a very exciting time in China, and it's a very interesting place to watch. So thanks for your time today.